Good morning, everybody. It's Monday, July 29th, 5:26 a.m. Central Time. Grain markets are mixed to lower this morning. December corn futures down 1 at 409. November soybeans down 14 3/4 at 1033 3/4. December Chicago wheat down 2.5 at 546. December Kansas City wheat up 1.5 at 563.5. December spring wheat down 1/4 cent at 607 1/4. Let's start off with this big soybean collapse.
So soybean futures plummeted on Friday. The November 24 contract lost 31 cents per bushel. A shift in the U.S. weather forecast paired with poor export demand prospects helped push prices lower. Private groups estimate that fund traders were net sellers of about 20,000 contracts on the day. Large money managers were estimated to hold a net short of 185,000 contracts at Friday's close, which would be a new record if confirmed by the CFTC. The move erased all of the early week gains. Fresh lows were posted overnight.
Ugly stuff. 31 cents is the biggest single day loss for the November contract specifically in a long time. I think since at least earlier this year, it's been a long time since we lost that much in one day. I think you got three things going on here. The first one would be weather. We'll get to that in a second, but there was a shift in the weather, and I think that that was the biggest thing. The second one is the lack of a demand base. And make no mistake, soybean processing in the United States is as good as it's ever been, and it's going to be better than it's ever been in this upcoming marketing year. The problem is exports. We just don't have a solid book or even a decent book of new crop export sales. The third factor is an undersold U.S. farmer. I think that's a bigger factor in corn than it is in soybeans, but I think it's still a factor. And you combine those three, and it's just makes for ugly price action. So the big thing was the weather shift. Those other things are secondary, but the weather shift, make no mistake, was the reason for the acute, sharp sell-off on Friday. Let's get to the weather.
Excessive heat is likely to occur west of key corn and soybean areas this week. The forecast shifted on Friday, pushing excessive heat away from the U.S. Corn Belt and toward parts of western North Dakota, western South Dakota, Montana, Wyoming, Idaho, Washington, and Oregon. While temperatures across the Corn Belt will likely run slightly above normal, there is no extreme heat in the forecast. Rain pushed across portions of Iowa and Illinois early this morning. This morning's 10-day Euro model calls for widespread rainfall across a good portion of the U.S. Corn Belt.
Again, this was the reason largely for the big sell-off in row crops and specifically soybeans on Friday. Going into, say, a Thursday session, there was this forecast for extreme heat across the Western Corn Belt during the first week of August. And we're still going to run above normal, but only by, 1 to 5 degrees, generally speaking. And this extreme stuff in the 3 to 8, if you guys are watching on YouTube, it's all west of key corn and soybean growing areas. So the heat was removed or pushed west, and you've got plenty of rain in the forecast. Now, even before we get to that, look at the 10 to 15. Once you get out to that 10 to 15, you're talking cooler than normal temperatures. Rain this morning, and there's enough rain in this 10-day map across the Corn Belt to pressure prices. So the weather threat was essentially erased, and that's why all of the price gains from earlier in last week's sessions were erased. It was a shift in the forecast. This is typically the sort of stuff you'd see in June or July, but this roll around, we're seeing a little bit of it in August, I suppose.
So
not August, in late July. I'm sorry.
Excuse me. If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our premium videos from last week?
Lots of what I call hardcore grain marketing information last week. On Tuesday, I did a grain marketing review, talked about my final 2023 corn and soybean averages, what I advised for old crop, what I did right, what I did wrong. This is a super simple approach that I take to grain marketing, essentially cash sales broken down by crop year and percentage. I don't advise any fancy options trades or anything like that. Really no options trades at all. I think we did one last year. On Wednesday last week, I did new crop corn carry targets. If you have December corn HTAs and you don't want to deliver, can't deliver, logistics don't allow you to deliver this fall, you need to deliver in the spring or summer, what sort of carry targets should you be looking for? Matt Bennett was on with me on Thursday. We talked about the basis situation and why a basis collapse into harvest is very possible, and some of that's already started in some places, I think. Friday, we did social media circus. We talked about this idea that farmers are going to buy corn futures to squeeze the funds out of their net short position. which is an interesting concept among a bunch of other things. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. We've had a lot of really great grain marketing stuff recently. We've got some more great stuff coming out early this week. If you feel like your grain marketing is overcomplicated, or you did a bad job last year, or you're undersold, I think it's worth checking out. You can sign up for $50. You can see what we do. You can see how we think about things and see if it makes sense to you. Sign up this morning, guys. No other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot.
Fund traders continue to hold a massive net short position in the corn market. CFTC released weekly commitment of traders data on Friday. During the week ending July 23rd, the funds were net buyers of 19,000 contracts of corn. The net short of 334,000 contracts of corn is the third largest on record. Funds were net buyers of 10,000 contracts of soybeans. The net short of 173,000 contracts of soybeans is the second largest on record, behind last week's all-time high. And funds were net sellers of 328 contracts of SRW wheat on the week.
This is just turning into Groundhog Day. It's the same story every week that we do this. Funds are either record short or close to record short, and it's fluctuated a little bit, but they're just leaning very, very heavily on this. And a lot of it, I think, has to do with the undersold farmer, the projections for large stocks to use ratios, big carryouts, lack of demand, ideas that crops are going to be pretty big here in the United States this year. It's a pretty nasty cocktail right now.
Oil prices fell for a third consecutive week last week. WTI crude fell by 3.7% last week to close near $77 per bushel, the largest weekly decline since the beginning of May. The decline is attributed to concerns over China's economy and a pullback in the equity markets. China unexpectedly cut interest rates last week in an effort to support its economy. The decision to cut rates suggests that China's energy demand may remain sluggish for longer than anticipated. Oil exports to China were down 10.7% year over year in June.
Crude has been a little bit weaker. I'm not going to say that this is bearish corn and soybeans and wheat, but it's not bullish. It's not helpful. Crude has actually been pretty quiet since early 2023. It's been sideways in a range and an even tighter range so far this year. When you look at the Bloomberg Commodity Index, we haven't done this in a while. It's gotten ugly here the last couple of weeks. You're going to run into some key chart support. Energies have been a little weaker. Grains have certainly been weaker. Some of your metals have acted better. Livestock is still acting okay. But generally speaking, the commodity complex, not just corn, soybeans, and wheat, but when you throw together everything, your precious metals, your softs, your livestock, it's been softer as a whole, which is not really helpful.
A federal appeals court has overturned the EPA's denial of biofuel waivers. On Friday, the EPA's 2022 decision to deny small oil refineries temporary exemptions from the RFS program was upheld by a federal appeals court. The case has been sent back to the EPA for review. The blending program allows the EPA to grant exemptions to small refiners if they can prove that the standards cause them undue harm. The agency rejected numerous exemption requests back in 2022, which led to this legal dispute. The ruling is considered a victory for the refining industry, which opposes federal mandates to include biofuels in the nation's fuel supply.
So if these small refinery exemptions are back on the table, it means that renewable credits could be reduced, and you could ultimately see, I guess, reduced corn demand. This is not a story that's going to move the market, but it's seen as being a negative kind of undertone, I guess, for the most part. But is this going to affect your weekly ethanol production numbers anytime soon? No, probably not. And I think that the court cases regarding EPA and biofuels and all this stuff, they're endless. They're going to go on forever and ever and ever, and that's just the way it's going to work. Big oil and the biofuels lobby, they don't get along on a lot of stuff. Some of the stuff they're starting to get along with. But yeah, I don't know. I don't see that as being a big market mover. What did cattle do Friday?
They were mixed on Friday. Feeders were an average of $1.13 higher. Live cattle were 13 cents lower to 28 cents higher. Cash cattle trade was higher last week. In the north, cattle traded between $197 to $198, which was $1 to $2 higher compared to the prior week. In the south, cattle traded at $188 to $190, which was $2 higher than the previous week. Box beef was down on the week. Choice closed Friday at $313.77. That was down 6 cents on the week. Select closed Friday at $297.46. That was down $1.44 for the week.
Outside markets, U.S. dollars up just a little bit. Stocks are higher. The S&P is up 23. The Dow Jones is up 160. We've got bonds up just a little bit. Gold's up $12. Crude oil is down 13 cents in the September WTI at 77 bucks even. Mentioned Bitcoin is sharply higher today, up to 69,600, highest we've been in a little while. Have a great week, guys. We'll talk to you on Tuesday.